Hey, what's going on? Welcome back to the channel. In this video, we're going to be taking a look at Chainlink. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. If you haven't seen the previous update, make sure to watch that before watching this one. It's going to be linked in the top right hand corner of the screen. And also, I want to mention the donation link down below in the description. Feel free to donate to the kids of Gaza. And now let's jump into the TA. Taking a look at the daily chart, as you can see, we have a massive breakout here, and we talked about this in the previous update, of course, and we are still quite overextended. Now, the daily RSI has already started coming back down, which is great to see. However, once we take a look at the weekly RSI, you're still going to see that we are quite overextended. So we did set up a Fibonacci retracement here from the swing low that we printed all the way back in June this year, and we took the swing high from April 2023. And we managed to break out. We took out the technical target here at $11.75. That was a great point for anyone to take profits if you were looking to take profits. Of course, we managed to even take out the 2.272 at $16.42. Now the 20 EMA is barely holding us up here. We also have the second fib level trying to hold us up at $14.30, but I think inevitably we will start coming back down, and the 1.618 is going to be the minimal target for us, which is $11.75. That is going to be a really good area for us to pick up more coins if you don't have any Chainlink for whatever reason. But that's almost a 30% correction there, 30% pullback. And once again, if you haven't been buying Chainlink in here, guys, well, I don't know what were you doing, because we were talking about Chainlink this entire time on the channel for these, 100 for this year and a half. We've been buying, accumulating, and we have a pretty good position on our channel in our portfolio. So if we are going to be losing the 1.618, let's say the pullback is going to be a bit deeper, something bearish comes out and Bitcoin starts taking a deeper dive to the downside, the next level we have is $10.60. That is the 1.414 Fibonacci level, and below that we have $9.84, which is the 1.272. So essentially these three are going to be your important levels to hold us. And of course, the worst case scenario, I would assume, is us coming back down to retest this sideways channel. So as you can see, we had a massive resistance level here. It is possible we're going to come back down, bounce off of that, and then have a move to the upside from there. So $8.50 is going to be an incredible entry point. I'm not sure you're going to get down that low, but if you do, consider yourself, very fortunate. Now, if you are still looking to take profits, I would say $15 is fine. It's, especially if you were buying in here, and let's say you were just buying in for a short to mid-term trade, then of course, $15 is a massive price. If you bought, let's say, at $6.15, that's 150% to the upside. So if you're looking to swing trade and you're looking to buy at a lower price, you can still try to do that. Of course, do that at your own risk. That's not something that I recommend. You have to do your own research, and you have to know how to ride the waves and when to sell. So what I like to do is I like to see when the asset is at the most overbought levels, and only then you sell a fraction, a portion of your asset, and then you buy back lower. But again, if you're too emotional or you get too nervous, then just avoid that and stick to just holding your assets in your spot wallet. Now let's jump into the weekly chart. And before we continue with the video, I quickly want to mention my Patreon that's linked down below in the description. If you enjoy my content, you want to get more exclusive content, and you want to support me at the same time, definitely feel free to check out the Patreon, because you're going to get a 7-day free access on my Patreon and an instant access to all of my content since October 2021, which is when I started. You'll get access to content like exclusive weekly podcasts, and we're starting to invite guests already. We have 40 plus low cap gem posts. We have a bunch of project reviews. We have a bunch of resources that are going to help you save time and make more money with this upcoming bull market. So this is definitely a great exchange of value for the both of us. And once again, there's a 7-day 30-day free trial. Feel free to check it out. You can leave anytime, and let's continue with the video. And before we take a look at the weekly, I actually want to remind you guys that I think November 28th is when we are getting the staking 2.0 for Chainlink. So that could bring more eyes onto Chainlink, and we could have another move to the upside back to $16.30, quite possibly. But I think this move has already been exhausted, and I think we are going to be looking for a nice retracement. Now, you can see we have a Fibonacci set up from the swing high here down to the swing low here. So essentially we're measuring this entire move, and we want to see what levels we can target for a pullback. So of course the 0.5 and the 0.618 are is the golden ratio. So that is your golden pocket, and that's a very good entry point. But personally, I don't think we're going to be coming back down into this green block, into this sideways channel that we've been in. And I think the first level that we want to take a look at is $11.35. That's based on the daily chart. Few bounces we have here and there on the daily, so that's why we have this area set up here between $11.60 down to $10.95. You also have the 20 EMA on the weekly, which is currently sitting at $10.36. And I think that is the best entry point for anyone looking to get into Chainlink, because you can see we had a nice bounce off the 20 here in October. So we got a bit overextended, nice bounce off the 20, and then we absolutely exploded. And with this next up and coming pullback, hopefully we can bounce off the 20 EMA and then have another move to the upside. So look for the 20 as your support band. During bull markets, the 20 EMA on the weekly is your actual support band. So when you start losing that, things start going south. So that's what I have for your support levels, guys. I'm not gonna say that we are coming back down to $6, $7, because that's too bearish, right? I can't just say that because I want that to happen. Of course, I'd like to buy more Chainlink, but I just don't think that's going to be happening unless we have a black swan, unless we have a major capitulation across the markets and altcoins have major dips to the downside here, huge wicks, and then a very quick recovery, which is something that we've seen in 2020 with the COVID drop. Now, one other thing that I want you guys to pay attention to is this teal trend line. So, you know, we don't know if we're going to be coming back down to it right now, but maybe in the future, in the next few months, we could have a quick bounce off of it and then have the next leg up. No one knows what's going to happen, but just keep this trend line on the charts in case it does, just so you have an extra support level here. So the first time we tested this was back in June, and then we had another retest in September. So just keep this on your chart in case that does happen. Now, taking a look at the larger fib here, we have this set up from the swing low in July 2023, which is our bear market bottom, and we have the swing high, which is the all-time high at $52. So the level that we ran into here is the 0.5. So we ran into the golden pocket, which is this zone here, and that is essentially the strongest level for you to break above. Once we are able to break above the golden pocket, at that point, we can expect a full retracement back to the all-time high at the very least. So once you're able to solidify yourself above the golden ratio, above the 0.618, then a move back up to the all-time high is going to be, just a question of when and not if. But if you continue getting rejected from the golden ratio and the markets get more bearish and you start printing lower highs and lower lows, that is a potential signal that you're coming back down to your bear market low, right? But that's not something that we're looking at right now because we are breaking through massive and very powerful resistance levels. And we've already broken above the August 2022 high, which is very important. As long as we don't break below that, we should be bullish. So it doesn't really matter where we retrace back down to, as long as it is above $9 and we print the next low above $9, we are good for continuation, and we are good with this potential uptrend that we are starting that's going to take us into the bull market. Taking a look at the targets for the next bull market. So we have $98, which is going to be our minimal target. From where we are right now, that is going to be a 551% to the upside. From the all-time high, that is an 86% move to the upside. And then we have $136, which is going to be our second level at the 1.414. And of course, then we have $219. So these are going to be your three levels. Be careful waiting for $200. I would say start taking profits when you get closer to 100. And then, average your way out of the markets as you keep moving forward. But not a financial advice, of course. You have to have a plan ready and set to go when you're actually accumulating, because you don't want to be coming up with a plan when you're already in the bull market sitting at the peak there. Because at that point, you really want to be getting out of the markets, because you don't want to be essentially, you don't want to be holding your bags when we get the next capitulation and we go into the next bear market. Taking a look at the weekly RSI. So this is pretty obvious, if you ask me. This is really obvious, and this is not where you want to be buying, if you ask me, once again. The last time we were in the overbought was back in January and May 2021. So in the first half of 2021, that's when we got overextended. Then we printed this bearish divergence, of course, because the price action was printing a higher high, but the RSI was printing a lower high, as you can see. And this was a bearish divergence, and obviously from there we capitulated down in, and we printed the RSI bottom in June 2022. From there, we've been moving to the upside and printing a massive bullish divergence, which is when the RSI prints higher lows, but the price action is either printing or bouncing off the horizontal support, so not printing lower lows, or it is printing lower lows in contrast to the RSI, which is printing higher lows. So those divergences there have played out, and we had this massive breakout. And when you have something like that playing out, and you have this pattern playing out for a very long time, for a year and a half, you get a massive explosion like the one that we got. The stochastic on the weekly is also overbought. We are above the index of 80, so we should be waiting for a retracement hopefully within the next few weeks. And if you are able to catch the price below the index of 20, that's great. Feel free to accumulate at that point. But as of right now, all of the oscillators are telling us that this is not the time to be buying. The MACD is also quite overextended, and once we get the pullback, the MACD will start curling back down. And once we get the bearish cross, that means the downtrend has been confirmed, and we could potentially continue with that downtrend, just like we did back here in 2021. And we also had a brief bearish cross here in 2023 in May. So those are the oscillators, and once again, everything is overextended now. The majority of the altcoins are very overextended. If you actually take a look at this area here, we are running into a massive resistance level. So if you take a look at this, you can see we have a lot of bounces from that area. That's a very powerful zone between $18.85 down to $12.50. And as you can see, this was our resistance back in 2020. Then we broke above in 2021, and then we kept back testing this area as support. And then of course we lost it over here in 2022, and now we are back testing it as resistance. So from there we could have a retracement back down, fuel up, and then have an explosion above those levels, hopefully into 2024. But that is it for Chainlink, guys. Once again, if you haven't bought in, don't FOMO in. I'm not a financial advisor, but buying in when you're so overextended, when the RSI is sitting at the index of 75, that is just not the best, not the best thing to do. But regardless, let me know what is your average buy-in price. Let me know what are your targets for the bull market, and I'll see you in the next update. Stay safe and take care.